Ladies and gentlemen, as they say, time flies when you're having fun. We just arrived at the last and 12th slot of the German Select Conference, and I'm very happy and excited to present to you, last but not least, Elmos Semiconductor SE. The company will be presented and the presentation will be walked through by Mr. Ralf Hoppe, who is Head of Investor Relations, Public Relations, and ESG. Like always, if there are questions, please feel free to post them in the chat on the bottom of the screen. We will answer those questions in the Q&A session following the presentation. As also in all the other slots, this presentation will be recorded. With that, I will hand it over to Ralf. I'm excited to learn more about Elmos.
Yeah, hello everybody. Thanks, Holger, for the nice introduction. Welcome to our presentation at the German Select Conference. Thank you very much for your participation in these interesting and turbulent days. Like Holger said, my name is Ralf Hoppe. I'm heading the IR department at Elmos. I hold my presentation in English. It's an international conference. Maybe some of you will listen to a recording, but of course, at the end of the day, you can answer your question in German, in English, whatever you like. So let's start. I click. I'll start with a very brief overview of Elmos. Last year, we celebrated our 40th birthday, and since our foundation in 1984 in Dortmund, Elmos has developed from a small startup to a really leading and one of the most experienced supplier of automotive mixed signal semiconductors worldwide. Our innovative ICs enable intelligent electronics always at the edge of the vehicle. We address, I would say, several really key automotive megatrends, like, of course, electrification, autonomous driving, ADAS, safety, but also interior comfort, digitalization, and of course also up-and-coming software-defined vehicles. We have continuously expanded our international presence. We are a small player with more than 1,100 employees, but we are located in 19 locations worldwide, and we are always close to our customers. More than 450 chip designers, hardware and software engineers are located in our R&D centers worldwide. Many of the global tier ones are our direct customers. And I guess it's very important these days to mention that we only ship around 2% of products directly to the US. More than 50% of our sales are generated in Asia, where our ICs are assembled into a main board onto a specific system and then shipped to the car factories by our customers around the world in the different countries. Elmos chips, Elmos applications can be found in many models of basically all major OEM brands worldwide, in premium vehicles, of course, but as well as in entry-level car platforms from traditional European OEMs to car manufacturers in the East and West Coast of the United States, and of course also to local OEMs in Asia, and that's including many new brands in China. Basically, you can say our product distribution on OEM or on model and brand level is relatively close, being a mirror of the global automotive market. Let's have a look at our application fields, our product highlights. We have a strong focus on applications in the field of road safety, for example, ultrasonic ranging sensors enabled with our chips to detect the 360 environment around the car very, very precisely and deliver crucial sensor data for assisted and also autonomous driving in the city or at slow speeds. The latest generation, by the way, supported with AI. And of course, you may have read that in the newspaper, led by BYD. Currently, all major OEMs in China are upgrading their ultrasonic systems to offer improved ADAS level 3 functionality. And as the innovation and market lead in ultrasonic, this is a great opportunity for us. Another important topic in modern cars is the striking design and the well-being of the passengers. And this is enabled also by exterior and interior lighting solutions. Ambient light, for example, is a very fantastic success story. very popular in modern vehicles in all segments. And of course, they are also new and exciting application in both interior and exterior lighting, like illuminated front grills or illumination of the panorama or glass roof. With the ongoing electrification of the drivetrain, the demand for intelligent components or electromechanical components such as fans, pumps, actuators, valves, and shutters is steadily growing. In modern vehicles, several dozens of these, what we call it, little helpers, the tiny little motors, make it possible to control a wide range of systems electronically and fully automatically. This trend is driven by comfort functions, but of course also by thermal management, which is essential for EVs to increase the efficiency and the range of the vehicle. Already today, Elmos is the market leader in many of these relevant application fields, and our product portfolio specifically for EV is growing steadily. Of course, we have also new and promising applications such as e-fuses for modern vehicle boardnet architectures or software-defined vehicles. We have new sensor signal ICs, a new brake-by-wire application, which provides higher functional safety. Let's have a look at our market positions. We at Elmos are convinced that successful and very relevant supply of automotive chips has to be visible and has to be the clear market and innovation leader. And this is what we have achieved in our focus applications. I think it's crucial to understand market trends very early on and to interact with our customers, with OEMs, and with the tier ones at an eye-to-eye level. If you look at this chart here, if you look at our focus applications, you can see that we have succeeded in achieving number one position in 3 of these 5 application areas, and we will continue to improve our market position in all other areas as well through new business wins we have successfully acquired in the last couple of years. For our products, we see the increasing electrification of car platforms, higher ADAS levels, new boardnet architectures, software-defined vehicles as continuous growth drivers, and many of tomorrow's vehicles will contain many more mixed signal ICs from Elmos. A lot of our applications are completely independent of the vehicle drivetrain, be it a combustion engine, plug-in hybrid, or fully battery-powered EV. In pure battery EVs, on the other hand, we have an increasing application areas which generate further growth opportunities. I mentioned it before: thermal management, e-fuses for the securing the high voltage boardnet, improving aerodynamics, battery status sensing, and so on. Today, on average, this is the very broad average, every new car globally produced contains 8 Elmos ICs, 8 to 9 Elmos ICs. In some state-of-the-art premium vehicles today already, we see 70 Elmos IC. And when you go to tomorrow's battery-driven EVs with software-defined functionality, new boardnet architectures, these type of vehicles then can contain up to 150 Elmos chips per car. Market growth. I'll skip that chart. Here we go. Despite the current geopolitical economic uncertainties, the ongoing destocking, the automotive megatrends, the sustainable structural trends create a very favorable and long-term growth scenario for the automotive semiconductor market. All of these trends increase and expand the role of smart electronics in all aspects of the vehicle, not only the drivetrain, and increase the content of semiconductors in all systems and functions. And for Elmos, as an innovative, agile, and fabless semiconductor specialist, these long-term growth projections for the automotive semiconductor market are very promising. The vehicles become more intelligent. They are loaded with more digital, electronic, and safety and autonomous technologies. The semiconductor content per vehicle is expected to grow significantly, as most of these functions are enabled by ICs. Let's go to the next chart. Yeah, I guess I don't want to talk in detail about the last year, about 2024. We could continue our positive economic and structural development. However, I would like to point out some major structural milestones we have achieved last year. You can see it here on the right side of this chart in the gray area. The acquisition of new project has continued to develop very positively, and our new design wins in 2024 were exceeding the high level of the previous years. 2024 was the second best year of design wins in our company. The best year was the allocation year 2022, by far, by the way. Our OEE, which means overall equipment effectiveness program in our testing backend area, has started successfully with quite some positive results. And you can see it already in our lower capex ratio, both for 2024 and also for our capex guidance for this year. This increasing operational efficiency, test time optimization, these are key elements for better utilization of our testing capacity, resulting at the end of the day in lower capex needs in the future. Very, very important project, the sale of our wafer fab. So the transformation of Elmos into a fabless company is now finally completed. As you know, we sold the Dortmund fab to the US company Littelfuse for around 93 million euro. As a fabless company, Elmos now accesses modern technologies from our foundry partners, including, of course, for the next couple of years from our Dortmund fab. We can now, even better utilizing our strong growth potential with highly innovative automotive ICs without the burden, if you want to call that, of an own front-end fab. China is a very important topic in our strategy. Our approach to increase our local presence in China is well on track. Increasing local presence and managing a local value chain in China, these are important requirements for defending our already strong market position in the world's largest automotive market. And also, as of January 1st this year, we have fully realigned or restructured our corporate structure with Elmos Semiconductor as a group holding, now located in Leverkusen for tax purposes, and 4 new operational entities at our main site in Dortmund. And of course, also a very important project, we are in the final stretch of upgrading our SAP system to S4 HANA. I guess, I hope, or you agree that this list is really an impressive testament or proof to our execution track record. Yeah, I will skip all these charts regarding the financials, and I will go back here. I will, focus on the current market environment. Based on in general lower automotive market projections, growing economic and geopolitical uncertainties as well. I mentioned it before. The ongoing destocking, at least in the first half of this year. The muted development of the automotive and of course also of the automotive semiconductor market will continue this year. And the impacts of the US Liberation Day and potential counter tariffs by other countries are further increasing geopolitical and economic uncertainties. Because I'm pretty sure you will ask about our view on the new tariffs, I'll try to answer that, I would say, complex topic as proactively and as best as I can. So let's start first. What's the first scenario? Direct impact on Elmos of our shipments into the US. When you look at the White House tariff fact sheet, it says that semiconductors are not included in the tariffs for the time being. So currently there is no direct impact for Elmos, but this can change, of course, in the future. So if semiconductors would be included in the tariffs in the future, the direct impact for us would be limited, as we ship only 2% of our revenues directly to customers located in the US. Most of our chips, I mentioned it before, are assembled onto a main board or into a system in Asia, and then the complete system is shipped by our customers to OEM car lines across the world. So here, for the time being, no impact. If semiconductors would be included, limited impact for us. Second scenario, what could be an indirect impact of these tariffs on the US car market? You know that all cars imported to the US will be taxed by 25% starting April 3rd, and automotive components imported to the US will be taxed starting in May. So if a US customer chooses a US made car, a GM, a Ford, a Tesla, whatever, instead of an imported car, this decision basically has no major impact on Elmos, as our ICs are included in almost all brands and models globally, including all of the US OEMs. So as long as the Americans continue to buy cars, we will be okay. But on the other hand, what could be a potential impact on US car sales due to the tariffs on automotive components? I guess it's fair to say that around 50%, so half of all components in a US made car are imported, mainly from Mexico or from Europe. If these components will be taxed with 20%, the production cost of a US made car, of course, will be higher by 10%, 20% on half of the components. Further assuming that the OEM will fully pass on the cost increase to the end customer, the car gets 10% more pricey. And again, further assuming that the price elasticity of demand is 1, US car sales will go down by around 10%. Based on a total sales of 16 million cars in the US last year, around 1.6 million cars would be lost due to the tariffs. This means that the corresponding full year effect on the global automotive market will be less than 2%, 1.6 million cars over 90 million cars globally. For 2025, the impact will be lower, maybe around 1%, since the tariffs may not be introduced until May this year. Of course, 1 or 2% lower global car sales is a noticeable impact also for us, of course, but it's not a total disaster for the global automotive market. I guess the biggest unknown is the potential impact of a full-blown trade war on global economy. Potential global recession, a high inflation, I would say, might be the biggest risk in case of a longer-lasting global trade war with the US. But you know, this is impossible to estimate, and this remains, I would say, the biggest risk and the biggest uncertainty. Overall, I guess everybody agrees the new tariffs and also the potential counter tariffs are leading to further escalation of the tensions, uncertainties, and volatility. And of course, everybody is seeing that as a development, or in the development of the global stock markets in the last couple of days. Let's have a look finally at our outlook for this year. As I said before, the potential impact of new tariffs, increasing trade conflicts are really hard to estimate, and of course they are not included in this outlook. In this ongoing challenging environment, visibility is limited. Order behavior is dominated by short-term ordering, and inventory digestion is continuing. We have based our outlook on the assumption that the second half of 2025 will be better. We'll see increasing levels of order levels compared to the first 6 months. As of today, we expect sales of 580 million euros with a range of plus minus 30 million euros. I would say with this more flattish development, We're doing better than most of our peers, which are expecting on average -8% sales decline this year. Q1 will be the weakest quarter with lower sales versus Q4 and also Q1 2024. Our analysts expect Q1 sales between 125 and 130 million euros. So pick something in the middle. I guess that's a solid guess. But then we expect strong sequential growth in Q2, and like I said, a better second half compared to the first 6 months. We are confident in our strong and resilient operating model, so we plan to keep our strong profitability with EBIT margin guidance of 23% plus minus 3 percentage points. Again, this would also mean a better performance than most of our closest peers. CapEx is expected at 7% plus minus 2 percentage points. So yeah, continuing at a low level. And cash flow will increase. We assume in our current outlook a free cash flow to sales ratio of 7% plus minus 2 percentage points. Yeah, that's not. Here we go. So sorry. Yeah, this is the end basically of my presentation, ladies and gentlemen. First of all, thank you very much for your attention. Thanks for your participation. And now I would like to ask Holger to ask the floor for questions.
Thank you so much, Ralph. And we do have a couple of questions, some of which you have already answered. Needless to say, in this environment currently, people are very much concerned about what tariffs might have as an impact on your business development. I think you alluded to that quite a bit, so we don't have to refocus in unless there is something that you want to add, because there was a question if you could quantify the indirect impact of the US automotive tariffs and if this can or may affect your guidance or your confidence in achieving the 2025 outlook.
I think I answered this question proactively, like I said. So it's very hard to really estimate or quantify the impact, specifically when it comes to the global economic development. If there will be a longer lasting trade war between the US and other countries, of course, this will impact global economy. This will impact automotive market. This will impact all other markets as well. So this will also impact Elmos at the end of the day. But for the time being, we cannot estimate that. Currently, based on the information we have, we are confident that we can achieve our guidance. But again, if there will be an escalating trade conflict, this may change in the future as well, but not as we see it today.
Also, something that you did mention and that has been plaguing your development over the last quarters was the destocking or the inventory cycle in semis. And there are a couple of questions surrounding that issue, basically all going into the direction of whether 2025 will be the year where this is going to end, if you can already see initial signs of it slowing down or coming to an end, and when you would expect the trough in the automotive semi market.
Destocking is still ongoing. It has not accelerated, but still most of our customers are ordering lower demand than they should order based on their real demand, and they also order shorter than they should order. Our normal lead time is 26 weeks, so give or take half a year. When you look at the customer ordering behavior, more than 60% of our customers ordering on a shorter level, on a shorter lead time. So they want to keep up flexibility because they also don't know what's going to happen, specifically after the Liberation Day. What we see in our order book that Q1 is over. We can say it's past tense. Q1 will be the weakest quarter of this year. Like I said, we see based on the order book for Q2 that we'll expect strong growth Q2 versus Q1. and then also sequential growth in every quarter. But the biggest growth momentum we see for the time being is Q2 versus Q1. We think that most of the destocking should be done by the end of the second quarter, maybe not to 100%, but again, the majority of the destocking should be over. Inventory levels really came down. Destocking went on for a long time, and nobody can live out of inventory forever. So yeah, that's all we can say regarding destocking.
You indirectly mentioned Liberation Day in your statement. Would you expect, and that's part of one of the questions, would you expect the current turmoil in tariffs to potentially also have an impact on the lead times and on the destocking?
Not specifically on lead times and destocking, but it could have, of course, a potential impact on car sales, on car production volumes. Going into the US, you already read some of the news that some of the European OEMs are postponing their deliveries into the US due to the tariffs. We'll have to wait and see.
Can you give us insights into design wins? If there were any major design wins or what the pipeline looks like? I don't know if you published this, but that was a question.
We don't specifically publish design win numbers. Design win track record is still very strong. Like I mentioned, 2024 was the second best year in our history. 2022 was the biggest year, the best year by far, because there were a lot of let's call it allocation related design wins, short-term opportunities, because we could deliver better than some of our customers, some of our competitors and customers were approaching us, please help us, we need the chips, and that triggered some short-term design wins, and that basically tripled the design win value in 2022 compared to 2019 or 2020, but also 2023 and 2024 design levels were twice as high as levels seen in 19 and 20. So design win pipeline is very well filled, and we are confident that we can achieve our realistic growth momentum of high single digit, low double digit annual growth rates as soon as the stocking is done, as soon as customers going back to ordering towards their real demand.
Thank you. Looking at the guidance for 2025, your EBIT margin at the midpoint for this year is expected lower than in 2024. And the question is, what did you bake into that assumption, or what's driving that?
First of all, we took with our guidance, we took a conservative approach, I would say, both in the absolute value, but also in the range. Of course, we will be impacted a little bit by the lower volumes. We'll impacted by higher costs. Inflation is still there. Labor rates are going up, and we have to counter all these effects to make sure that we keep our profitability. We're currently running cost optimization program globally, but most of it's in Germany for labor costs and also material costs. We want to make sure that we can keep our gross profit and also OPEX levels we have achieved in the past, and that we are confident that we can keep a 23% EBIT margin or maybe a little bit more despite a very challenging market environment.
Great. We're coming to the last question, which is related to evaluation, and basically states that you are trading at a discount to peers currently, and whether you see any additional reason for that fact beyond the cash flow that is lower presently.
Not really. Of course, when you compare us to US peers, US companies, stock listed companies always have a higher multiple than European ones. Okay, but if you compare us also to European companies, Infineon, Melexis, ST Micro, we are cheaper. Our multiples are lower, and for us, the clear argument for that is our not existing track record in free cash flow. I think we performed well in terms of growth, in terms of increasing profitability in the last couple of years. We outperformed basically the market and our peers during the allocation phase, achieving or doubling more than doubling our revenues in 3 years, achieving a 25% EBIT margin, but the cash record is not there. We are building currently that cash record. We are focusing very, very much on increasing our cash flow sustainably. And we think, and all the measures, or some of the measures I explained, the new headquarters in Leverkusen, working capital optimization, the OEE program for lower capex, all these measures are helping to improve our cash performance. And by achieving a sustainable higher free cash flow ratio, we are confident that we can also achieve a higher shareholder value and at least shrink that valuation gap to our peers. If we can close it completely, we'll have to wait and see. But for us, the message from our investors and from analysts is you have to build a track record. You're doing great in all other areas, but your cash flow is really weak. Please improve that. And that's what we are doing.
And last question, which is a follow-up question to the design win question a little earlier. Obviously, design wins give you visibility into the future. And the question reads, given your 2030 targets, whether the design wins that you currently have are sufficient to secure your 2030 targets, which is an implied top-line growth of around 11% CAGR, or where you stand there. If you can just give us an idea.
Of course, our design wins contribute towards that target, but of course not the billion revenue target by 2023 is not covered by all of the design wins yet. We also have to achieve additional design wins as we go into the years in 2025, 2026. Most of our design wins have let's call it lead time before they generate serial revenue of around 3 years, some longer, some shorter, so on average 3 years. So of course that means all of the design wins we have in 2024, for example, have not full impact already in 2030. So we need some more design wins, but this is an annual achievement by our sales guys, and this is a must for all of automotive companies to acquire new business for future growth.
There's no free lunch. All right. Well, this was the last question, which not only concludes the 12th slot at the German Select Conference and the presentation of Elmos, it also concludes our German Select Conference today. And I do appreciate you all taking the time to visit with us, to listen to the investment cases, of course, to other presenters. Ralph, thanks so much for spending the time and explaining your business cases, answering questions, especially, and that goes out to you investors that attend today, given that I'm sure some of you had better things to do today, given the volatile market environment. So great, thank you from our side and from all the companies. We will be sending out and have in some cases already send out a link for feedback. We'd be very appreciative if you could fill out the feedback so that we can give it back to the companies. Also, if you have any questions on the investment cases, feel free to contact us or the companies directly. Wish you all a great afternoon. Thanks so much for participating. And Ralph, if you have a second, then we can just stay on board for a little while longer.
Okay, yeah. Thanks, everybody. Thanks for having me. Thank you. Bye-bye.